back to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We're going to start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good setups. Now remember, this is not financial advice, and I'm not a financial advisor. Alright guys, it's currently 6:53 p.m. and the price of Bitcoin is at 108,032. Now yesterday we had the weekly candle close and also the 2-week candle close, and yesterday this was for the 2-week a green engulfing candle, which is bullish, and the 21 moving average is at 94,779. It's a little bit far, but we're not too far away from the candles here, so that's pretty good. We did have some bearish divergence on the stochastics, and we're starting to kind of roll over. Maybe we could start curving back up. Let's see what's happening. We have 13 days before this candle closes, but that 2-week chart they closed pretty good. Now the weekly chart yesterday we closed with a bullish hammer, I would call this. A little indecisive, but it's a little higher up, so I'll consider that a bullish hammer. The 21 moving average is at 96,227. So you know, the 21 moving average has been moving up nicely. We're not too far away from it. If we do fall down drastically on some black swan or something like that, then it's possible that, you know, we fall down there, but we would have support. So far we have been flagging out nicely here though. Again, this could also be an inverted head and shoulder that could be playing out. I also have this as a flag that could take us to about 135,000. I also have this as a falling wedge that would take us to 117. So there's a lot of options here. Now we did have bearish divergence, but it didn't look like much of it played out. We did have some red candles, but we didn't get a massive drop like that. And the stochastics, even though they're toppy, they're starting to curve up. So this all in all is looking bullish. Again, we can't go too much by this new candle. We still have 6 days before that closes, but all in all, we've had 2 good bullish weeks so far with the closes. Now on the 6-day chart, the stochastics are on the way down, but we're above the 21 moving average. That's what's the most important here. 5-day, we still have room to continue going down. On the 4-day here on the stochastics, if we zoom in, it just looks like we're going up. I thought I saw like a little bit of curvature, but it still looks like we're on the way up there. The 3-day here, I see a little curvature, but we could probably still continue going up. I'm not liking these 2 wicks here. That's showing that we can't get above this area here. We have some resistance at 109. So let's see what ends up happening with that. On the 2-day chart, this candle closes today, and so far we have a bearish hammer. So we wicked all the way up to 109,629, and now we're all the way down here to 108,000. The 21 moving average is at 106,252. So as long as we can remain above that, we remain bullish. This stochastic RSI though, it looked like we were going to roll over, but then we started curving up. So this is looking bullish for the moment, as long as we could close above this 21 moving average. Now on the daily chart, we have bearish divergence here on the stochastic RSI. Looks like a double top here, and it looks like we're going down. Yesterday we closed good with a good green candle. Today now we're having a red engulfing candle, and you know, we have the 100 finally crossed the 200 moving average bullish. We have the 80. The only thing here is we got to flip this. We need the 21 moving average to be above the 50 moving average for us to remain bullish here. I'm looking at this as a possible inverted head and shoulder as well that could pop us up. We just can't really lose this 80 moving average, which is currently at 103,000. The 21 moving average is at 106,359. So as long as we stay above that, I am bullish. We've been above that for a good couple of days here, almost like 9-10 days. So that's bullish so far. Now the 22-hour chart, yesterday all the stochastics on the lower time frames looked like they were going up, but now they're starting to roll over, and we're starting to kind of lose a 21 moving average here at 107,988. So we start losing this, the next line of defense is going to be this 100 moving average at 106,538. Take a look at the 12-hour. We're starting to pump over the 10-hour. We were on the way up, now we're rolling over, and we're trying to get back above the 21 moving average, but we're kind of losing it. Something that I'm seeing here is that this is a possible head and shoulder pattern, and if this plays out, it looks like the measure move will take us to about the 200 moving average at 105,000. So this is a possibility here, unless we could start coming back up. This could actually trigger. The neckline is around 106,000, so 106,500 around this, so we have to maintain above that. 8-hour chart on the way down, we lost the 21 moving average. Again, this is looking like a head and and shoulder pattern. 6-hour chart, we're on the way down. Head and shoulder pattern as well. Here we're starting to lose the 50 moving average. On the 4-hour chart also is looking like a head and shoulder pattern, and we lost the 21 moving average, and we're being held up right now by the 80 moving average, which is at 107,762. What's good here is that the stochastic RSI is starting to get down here, starting to get below the dotted line, but we still have to curve up, so we could still come all the way down, then make it back up. So we have to see what ends up happening. The RSI here is starting to give us some curvature back up, so that's good. Now here in the 4-hour chart, this is where I had a inverted head and shoulder pattern, and currently we're still holding this right shoulder. You know, we start going below this head, this will be invalidated, or if we continue to drag here for a very long time. Now on the 1-hour chart yesterday, I left you guys with a flag, and I said the measured move could bring us back into this other rectangular flag up here, and as you can see, we did get back into it. We wicked up, we made it all the way to 109,700. So I would consider this a winning trade here, even though the measured move, I had it to the top of this channel, which was around 110,000. But again, the measured move is the potential of the move. That doesn't mean it has to get there. So whoever took this flag yesterday, congratulations. We made some profit here. Now what I'm kind of seeing is we kind of see like some type of a falling wedge here. Let's draw the pattern here. And if this falling wedge, it looks like it's starting to break out at the moment. Not gonna give us much of a measured move, but it would bring us possibly back above the 21 moving average, which we do need in order to remain bullish. So this will probably bring us back up to 108,737. So we're going to leave that for now. I'm going to take off this flag that pretty much already played out. So congratulations again to whoever took that. And now I have this bigger rectangular flag here, which was playing out perfectly here until we fell out of the pattern. I've been keeping it to see if we get back up here, but you know, I'm going to take it out at this moment because I feel like we failed that pattern, even though we could probably make it back up there. But at the moment, let's see if this falling wedge plays out. If we go now to the 15-minute chart, we take off the patterns here, we're below the 200 and we're just slightly above the 21 moving average, but this kind of looks like an inverted head and shoulder pattern. And if I put the patterns on this inverted head and shoulder, measured move to this will pretty much bring us up to about 108,938. So this confluence here with the falling wedge on the 1 hour and this inverted head and shoulder on the 15-minute, it's possible that we do make it back close to 109,000. So there's two patterns here dictating that, so I feel like that's probably what's going to end up happening. Then we'll see from there. I did erase that flag because I feel like it's already invalidated. We'll just have to mess around with new patterns from here on out. So overall, guys, what I'm seeing is if we do drop down, I feel like we should have support on this 200 moving average, which is at 106,000 pretty much. If we fall below that, maybe 105,000, but I still feel like we should come back up to 110,000 and probably beyond. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.